The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 9th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. Inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, relatively flat market in the Dow and the S&P. The Dow is off 8 points. The S&P is basically totally flat. NDX 100, different story. That's up 21 points. Semiconductor index, a different story. That's up 1 1/10%. That's up 11 points out there. Russell's up 2.5 points. The transports are up about 0.5%, 0.4% to be exact. Nearly 40%. Gold, on the other hand, off $11, $12.16. What a move inside the yen. Wide-ranging bar coming into that 0.618 retracement level. That's a dangerous thing. Excuse me. That's a dangerous thing out there. That says you should anticipate that gold's going to go much, much lower if the yen is going to continue to weaken. Light sweet crude back 56 pennies. She's trading out at 45.88. Natural gas up slightly. Leading the chart here to the upside, you've got World Acceptance Corp, the old GMAC, up $17 or 27%. Straight Path Communications up $14 or 6.5%. Tesla up $13. Wayfair Inc. up $11. Mercado Libre, you just got to like saying that, up $7. Chipotle, another one you have to like saying, up nearly $7. To the downside, Transdigm Group off $15. Nevro Corp down 8. International, what was that? Flavors and fragrance, I believe. We looked at that stock during, I did Larry's show earlier this morning. I've got a couple emails that came in from that requesting if I could go through a couple of those charts that we looked at earlier, and we'll do that. Not right off the bat, though. Sam Adams, Boston Beer, that's down 4% or $6. So we've got some things to look at, but certainly I want to look at what you want to look at out there. Let's start by taking a look at just an update as to where we're at with regard to the equity futures contracts. Here's what we know. Again, this is our 4-panel chart out here. Sorry for not having this completely ready to go out there. I didn't realize that I had made a change, and I'm just trying to get the data windows out here, so for those of you following, especially on TigerTV or Inside the Den, you've got the ability to go ahead and write down these numbers if you don't have them. So the upper left-hand panel is the ES Mini, and the real key area here, this is not like this doesn't mean go short the S&P 500. The real key area that it is struggling with is 23.97 1/4. It's really in this little tight trading range, little wedgie pattern that's going on here between the top of its daily box, which is 23.91.80. If you saw a close under that, I'd feel more comfortable saying, okay, I can see you taking a short-term short down into the 23.74 level out there. But otherwise, what's really going on is ES Mini is just simply trying to take out the resistance zone out here. A close today, about 23.97 1/4, and more than a couple ticks like we saw on Friday would be very bullish. The other side, if you want to take a look, we always look at both the bullish and the bear side. I've got to do that. That means you should do it as well. It would certainly be inside the NQ, and that would require a close below 56.41.75. If you don't see that, Now, look, the other markets, the Dow, the S&P, the Russell, yeah, they're struggling out here, but nothing's going to totally crack to the downside without the NQ joining the party. And it is doing nothing but partying out here. And so any continued closes about 56, 41, 75, short at your own risk out there. But peril, most likely, is what you're going to be looking at. Inside the Dow, the real number that it's trying to get above, it hasn't been able to, is 21,010. I suspect that's where it wants to head to again. Russell 2000 really hasn't fallen apart. For the last 5 trading sessions, all that it's done is tested its weekly point of control level area, 1383.20. Hasn't been able to bust through it. The weekly profile, quite frankly, is a profile that is structured where the buyers are the ones in control. And what the buyers know is buying the Russell 2000, the TF out there between 1367 and 1383 has a high probability of turning out a positive trade out here. So we don't see anything that is really cracking. That does not mean there are no cracks in the armor out there, because certainly there are. And if we take a look at advanced decline data, let's just take a look at the oscillator reading. New York Stock Exchange being the left-hand panel, NASDAQ being the one to the right of that, then the Dow, and then we have the S&P 500. We have the advanced decline oscillator reading for 3 of the 4, that being the New York Stock Exchange, NASDAQ, and the Dow. You're looking at the bottom panel of the screen out here, and what we can see is that each of them are below 0. Now, that does not bode well for buyers out there. That says that, and in the case of the NASDAQ, even with price making new highs out here, with that oscillator reading down below 0, that's where you start to run into divergences. And divergences are important for us to take a look at. If we look, I'll go ahead and draw the red line in, the red line. So here is a high that formed inside. This is back on May 2nd. So you can see we're at a higher high today. And if I come take a look at the May 2nd level inside of the advanced decline oscillator reading, you can see that it's making a bit of a declining tops pattern. The last time that we had this that had any important meaning to us was back on March the 1st. When price moved higher, we did not have that same pattern with regard to that advanced decline oscillator reading, and we saw a little bearish reversal signal that took place on March the 2nd, and we saw a slightly pullback sideways-ish type market out there. So in the NASDAQ composite, it's got a slight problem, but it may just simply be slight, because if we go take a look at the actual indice out here, so we'll pop up a different screen, we'll pull up the NASDAQ composite, so we'll look for Stevie's red line. We're going to see both a bullish signal and a bearish signal. Let me go ahead and update this chart out here. One of the things you're going to see is over the course of really the last couple of days, all that price has been doing in the morning sell-off, so to speak, if we want to call it a sell-off, has been moving down to test Stevie's red line. That's that oscillator and change line. That's something I'll be teaching you about more in detail, you being subscribers out there, and you can be a subscriber. It's never been easier to be a subscriber. Next Wednesday, May the 17th out there. And that is a important and a key level of telling you which side of the trade to be on. In this case here, when price comes down and tests support, rejects it, as it did yesterday, as it did the day before, as it did the day before that, it says our price oscillator at the very bottom panel of the screen is rising. It's above 0. There's not too much more bullishness that you can have with a rising price oscillator above 0. You may not like the volume. Hey, too bad for you. The markets still want to move higher until we get some other signal.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. So we were taking a look at the NASDAQ composite. I had this chart up on the screen, so let's go back to it. And here we're taking a look at, again, Stevie's red line is an important line to pay attention to. The price number on it as we speak right now is 6091.57. And that number will change as price changes, but if you wrote that down on a pad of paper and you saw it close below that, that would indicate a chink in the armor. In fact, it would indicate, quite frankly, at least a short-term top. And now you would say, whoa, how'd you come up with that? Here's the deal. I'm just going to simply be agnostic as to, even though I'm long, I'm still simply going to be agnostic as to what the charts are communicating to you. If the charts are communicating a bullish signal, that's how I'm going to square it up with you. The charts are telling us a story. I'm just narrating the story. And what does it take in order to be able to switch that position? Well, what we can see out here is price today is rising higher and doing it with less relative energy. Now, that alone is not a signal that says, okay, it's over with. In fact, if you were at the free workshop, which is still on your members page, no matter whether you were a subscriber or not, we identified the two patterns that are present at every bear market top out there. Now, we're not talking about a bear market top here, okay? It's not present in the longer-term charts out here. But they also work on the intraday time periods. In this case here, we're talking about a bear market, something that's going to move 20% or more, or even a correction, let's say between 10 to 20% out there. We're not talking about a one-day deal out here. In this case, a close below 60.91.65 would give us a bearish reversal candle with price moving higher, doing less relative energy. That would be quite a signal. Now, being able to identify for you the 7, and you only need to understand 7, bullish and bearish signals out there is something else that we'll cover during the workshop next Wednesday out there. So price moving higher, doing less relative energy, but still it's just kind of like a warning sign, so to speak, or just take an umbrella because it might rain. You live in Florida. You get that at any point in time out there. But sometimes it can turn into a hurricane, and that's what you and I are looking for. So there are some potential chinks in the armor, but no reason for your skirt to get a tizzy until you see it close below Stevie's red line out there, and we do not have that just yet. In fact, you'd have to ask yourself, or I would ask myself this, so I'm going to ask you. If we take a look at the New York Stock Exchange, which really for the past since May 3rd. In the case of the NASDAQ Composite, since May 3rd, really the signal is that sellers are the ones in control out here. They're doing a bang-up job, are they not? Yeah, exactly. Nothing more bullish than failed bearish patterns out there. Now, why are they not able to do a bang-up job out here? Well, it's really pretty simple. I talked about the VIX index, kind of ad nauseum, I suppose, earlier today, but I thought that it was really important because I was one of the few out there that says, here's how you trade it, and here's what a low volatility index session means, or the close out there, and that way it becomes useful data versus just who knows what the heck sometimes some folks are thinking out here. But when you have a volatility index that's below the 50-day exponential moving average, that signals liquidity, okay, that's in the market. That's going to be able to go ahead and move markets higher. When you get it down below this little blue band out here, like where you're at, that's the Bollinger Band. It's not the typical Bollinger Band that you might use or is the default on most systems. I'll teach you all about that at next Wednesday's work. There's a lot to go over. So if you show up, you got to show up focused because we're going to cover it, We're going to cover it, that's for sure. But when you get below the lower part of this band out here, the message is gobs of liquidity. And I can tell you, when there's gobs of liquidity in the marketplace, you may not see it in volume. Okay, yeah, what's the point? The markets can still go higher with light volume. We've been doing it for how many years in a row? Somebody knows that message out there. It just gobs of liquidity, and that's what's really inside of the market. Now, what is it that can actually get my skirt in a tizzy out here to say, you know what? Now is probably the time to start looking for the short side of the trade. Well, we just look at a couple things that need to happen. What else I would need to happen? New York Stock Exchange, we talked about this just a few moments ago. Let's put this up here. I said, hey, since May 3rd, right? Since May 3rd, this thing has been trading below the zero line out there. So you've got to pay attention to it. Of course, you don't invest in New York Stock Exchange ETF, do you? No, of course not. Out here, and so nor does anyone else. But it is at least a good signal generating, or can be a good signal generating tool out here. So when I take a look at and we were just looking at the advanced decline data. It's just looking at the when we take a look at the oscillator rating, just the difference between the 19 to 39-day exponential moving averages for that data. What's also nice to do is sum that data up. Now, what I like to do is sum that data up just based on exactly how many stocks traded, because not all, you might say, what the Sam Eck are you talking about? Well, if we go down here and we take a look at my advanced decline line data out here, you're going to see you have 1,252 advancing issues, 1,613 right now declining issues out there. We also happen to have unchanged issues. I don't have that showing here. I thought that I did, but I don't have that showing here. We also have unchanged issues. Hey, if you haven't changed during the day, I don't really care about you with regard to my calculation, because one's a numerator, one's a denominator. I want them to both be accurate with regard to generating information for me. And that accuracy, well, what happens is, folks, it pays off. It pays off to be accurate with regard to the way we take a look at things out here. So that accurate gauge is what's really referred to as a ratio adjusted summation index for the advanced decline data. Now, you try saying that just once in a row out there, you'll see that that's kind of like a tongue twister. But what's not a twister out here is when that data line, that summation data line on the bottom panel, when it gets above zero, it tells us there are higher prices ahead, which we actually have seen for the past several days since the advanced decline ratio adjusted summation. See how I told you it was hard to do, got above zero. Now, if we see a failure and it gets below zero and the New York Stock Exchange gets below Stevie's red line, which we're not too far, you need to see both, then, hey, it sounds like a little pitch of voice there, then and only then, almost reminds me of my cousin Vinny, when the judge, Herman Munster, went ahead and answered the question, how many fingers am I holding up out there? And then I think, Vinny, then and only then, I think that's where it comes from. So that red line is important, but as long as the New York Stock Exchange is above it, as long as the adjusted ratio line is above zero out here, actually things are pretty darn bullish out here. So that's another thing that I'm watching. Subscribers will know about it. They'll know when there is such a crossover out here. As I say, there are some chinks in the armor. And I'm really trying to not do a repeat of the 9 o'clock show. That doesn't make a whole lot of sense. And I don't want to give you all of my stuff for I have to keep some stuff, but I will show you something else that is important that I'm paying attention to in the S&P 500 as an example. That is troublesome. No question, it is troublesome out here. Here is the SPY. Now, you're going to look at a red line and a black line on the bottom portion of my chart out here, and you're going to say, well, all right, Steve, well, now what in the heck are you showing me? And, of course, what I'm going to say, well, what we're looking at is a red line and a black line. The red line happens to be the SPY, but is measuring the difference between the open price, such as 9:30 in the morning, and the closing price at 4 o'clock. And the black line does just the opposite. It measures last night's closing price versus this morning's opening price. One measures overseas markets influence, or the futures market on the SPY, and the other is taking a look at what happens in the U.S. market. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were taking a look at this chart here. I'll go ahead and put it back on the screen out here. And really what we're looking at, and there's a mathematical formula that I use. I'm not going to go into it. That is analyzing or analyzing, however it is you like to use that terminology out there. The difference between what happens in the overnight session, what I'll call simply overseas markets, or try to pick up what's taken place in the futures market, versus what's going on in the U.S. market. And I can tell you that when I share with you that when the red line is above the black line, that's the U.S. market outperforming the black line, the overseas action, the overnight action. That's bullish for the S&P 500 or the spies out there. Now, since I believe it was the 26th out here of April is when we saw that spread cross over to the downside. Now, it's not a signal it's not a long short signal. It is just a method of being able to take the SPY itself and identify a useful tool to assist us with what it wants to do. How do we use it? Well, we use that to recognize that there's a chink in the armor, a problem, but we have to see other things as well. Hey, let's go out to Toronto and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you doing in Toronto?
Surviving.
Surviving. Okay. Well, you're in a beautiful city, and that's for sure.
I'm looking at a contrarian trade. I'm looking to sell short J.P. Morgan.
All right, so let's go take a look at J.P. Morgan. And what is your plan here? Do you have a target, first of all? So you're looking to go short.
I'm a mega bear, and looking at your chart there, you just removed it, but there's some nasty gaps down from November.
Are you talking about the S&P 500 or the SPYs?
Yeah, you had a previous chart there. Well, did you put in the J.P. Morgan? Yeah, you've got some gaps down there in early November. They need to be filled.
Maybe, and maybe at some point in time. Doesn't tell us when. Remember, gaps are signs of strength.
Right.
And I think sometimes the terminology of gaps will get filled can get so overused that people take a bearish outlook. And so, and when we say gaps get filled, the real meaning behind it, or at least the meaning behind it for me, is that price will come back to a breakout area. I just want to make sure that that at least but we don't know when price is going to come back to a breakout area. But in the case of J.P. Morgan, to assist you with the short trade, have you put it on already, Mike?
Yes, I have.
Okay, so here's what you're looking for next. There's some really good support, and I do mean really good support. So you want to see this price point taken out, at least with regard to the data as of today. And that's a price level of 84.84. And if price closes below 84.84, then what you have is you've got a market profile. In fact, I'm going to turn off the week. Well, I'm going to leave them on right now. Both the bottom of a new box that formed last week, Mike, and the point of control are at the same level, which is the bottom. That should be very strong support. Now, that adds to the weekly profile that you're looking at on my screen as well, where that point of control, little dashed green line, is closer to the bottom of the box. So that is really strong support. So I will say that your conclusion would be proved to be correct in that you would see lower price if price can close below those levels. We'll use the lower one, 84.84 out there. Then, with regard to your target, then you start looking for those signs of strength out there. And, it can be, doesn't necessarily have to be a gap. Mike, it could be just a trading session of November 14th, which would be a nice move, I think, percentage-wise to the downside. But it could be 80.44 that holds price, or it could be the low of 77.25. So, yes, there's gaps out here. I probably could go find put a chart of J.P. Morgan out here, and we could likely find some unfilled gaps. Let's say, for example, the most important unfilled gap is the island bottom pattern that formed on February, the day before and the day after February 11, 2016. Nothing more bullish than that. Is price going to come all the way back down to there? I don't think so. Not anytime soon. But it can. But with regard to your trade, and it sounds like is it more of a trade, or is this a real longer? Do you have a longer term outlook that says J.P. Morgan's?
I have a 4th of July. I would say the trend change around 4th of July because the earnings for J.P. Morgan come out in the second week of July.
Okay. So what
I see a head and shoulders on the chart there. Could you provide a measured move, please?
So in this case here, the measured move would take you to Probably approximately, I'm just going to do this kind of quickly here for you, because, I would say right around the trading session where you've got some volume back around November 10th. So kind of the area you and I had first identified around $75.
Okay.
If that neckline were to break out here. I know you mentioned July 4th as a potential bottom. If the market and if the Dow and if JP Morgan were to go along with the seasonal cycle, what this would suggest to you and I is that we would see a top around May 19th. And I anticipate the way things are trading that is in play. That's next Friday. That's a possibility. Then it moved down into June. And the market typically, Mike, has a nice bottom around June 25th. And so I would start saying if the market were to play out like this, I would be looking around that time frame for a move down into to take a look at perhaps covering that trade. But that's obviously a ways off. But that's an important seasonal cycle pattern for you to focus on and pay attention to, I think.
Great. Thank you very much.
Okay, you bet. Thanks so much for calling. That was Mike in the beautiful city of Toronto. No doubt about that. Okay, so the Dow's off 28, and we're talking about the SPY and the open to close and close to open out there in order to give us some type of signal. Let's go, since we're talking about the SPY, though, or since I was speaking about the SPY, and to answer Harry's question, who had listened in on Larry's show when I really took a shotgun out to all those people that are expressing to you that the volatility index is at a low that we haven't seen since 1993, which was the lowest low that I actually have on a closing basis out there, that being $9.31, December 22nd, 1993, that it seemed like the way things were being discussed is you've got to go out there and you've got to buy calls on the VIX or this is the top in the S&P 500. And what I can share with you is nothing could be further from the truth than that kind of analysis out there. You might say, what are you talking about, Steve-O? Well, let's just go ahead. Let's pull these charts back here. We'll go ahead and bring them out. They are important to take a look at. And it's happened more than one time. And it's happened so many times with regard to the way that the S&P 500 forms its tops and what the actual volatility index does out here, that it really gives us the opportunity to say that, you know what, there's not a top in the S&P 500 just yet. And any decline out there, this is going to be bought up. It's just not here just yet. Now, I mentioned the date of December 22nd, 1993, when we get down to a price level, closing price. We're looking at line charts out here, so I'm not looking at the intraday noise of December 22nd. Now, the 23rd of December, the 27th, the 28th, all back in 1993, we saw levels of 931, 948, 970, 982. What do those four numbers have in common? Yes, each of them on a closing basis were moving a bit higher out here. In fact, on January 28, 1994, we got up to a level of 994, another consecutive higher close. Folks, that's what forms a decent top in the S&P 500. That says we're off a week or so, at least, before we see that top. Just something to think about. If it happened before, it can happen again. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're taking a look at the chart, the top portion of the chart being the spot volatility index, the bottom chart being the S&P 500. And let's just say you statistically on the air, they were talking about how the volatility index back on December 22nd, 1993, got to an all-time low of 931. And they say, hey, that's a market top. Well, the truth is it wasn't. In fact, there wasn't a decent top until 30 days later, a little bit over 30 days later, February 2nd, 1994. Now, the one thing that this top in 1994 had in common with basically every other top out there was it had a rising VIX bottom, where the VIX was making higher lows out here and the S&P was making higher highs. Now, you don't have this pattern occurs all the time. All you have to do is just really spot it. If you take a look back here in the August 1994 timeframe, you had a rising VIX on a closing basis, and you had price in the S&P 500 moving higher before we saw a nice little decline out there. It happens all the time. And again, and so, Harry, that answers your question with regard to what is it that we would want to be taking a look at to try to identify a top out here. When the S&P 500 made its top in 2000 out here, the spot volatility index was not at 990. It was at 2226 out here. Okay, it was just dealing with 30. It boggles my mind out here. Some of the stuff that I hear. But that's why. Look, that's why a week from tomorrow, what I'm going to do is share with you the tools that you can really use in order to be able to help identify. And this is not for the ultra short-term trader. Not that you can't use it, but that's not really what I'm referring to. That's not the majority of the listening audience out here. I know that. And for those of you that are managing, especially if you attended the workshop that I did, that how to spot a bear market, and you hear all this fodder on TV. I don't want you to get. I don't want you to get too confused. If we take a look at when in 2007, when the S&P 500 made its top its highest high on a closing basis back then. It was 1565, and the trading session was, October 9th? October 9th out there. Now, the volatility index happened to be $16.12. So you go back into November 21st, 2006. Picture this. It's November 2006, and somebody on CNBC, I guarantee you, or Bloomberg, or wherever, said, my goodness, the volatility index is 990. It's the lowest it's been since 1993 out there. How many years was that? Now we talk about a quarter century. It wasn't that many years ago, and 15 years, or how many ever it was, right? That it's at the market is going to crash. It's going to cascade. How wrong could you possibly have been by believing that load of malarkey out there? You see, what happened back in 2007, before there was any kind of decent decline, which, by the way, took place beginning on February 20th, 2007, November 21st, 2006, you were at 990, then 997. Then 989, then 1002. You see, you had this little rising bottoms line inside the spot volatility index as price was moving higher in the S&P 500. So one day just doesn't do it, which is where we're at. Well, and yesterday was 977. And everyone's skirt is getting in a tizzy because right now we're at 983. So am I saying we can't have a retracement? Oh, goodness gracious, no. We absolutely can. Is it a retracement at a top of significance? I don't see it. Not by the way that I'm looking at things, by the hair on my chinny chin chin. And we need to see some other things take place. And when those other things take place, then the narration that I'm providing to you, well, it will absolutely change. And you don't want me really showing up here without conviction, I don't think, in my in what I believe that I'm seeing in the charts out here. No more than if we take a look at what's going on in Goldilocks land right now. And what's going on doesn't look good from the perspective of the Japanese yen, which right now it's backed off just a bit. But let's turn off these profiles out here because we don't really need these profiles encouraged because they're not really providing us with a ton of information as we speak right now, other than just simply junking up the chart. But this is a big move today. This is, you're looking for this suggesting that the Nikkei is going to have another huge gain overnight out here based on the way that the yen is weakening, the way that it's approaching its 0.618 retracement level of 114.64 out there. And if it hits that area, which really not that far away from it, with this wide-ranging bar, that could spell real trouble continued trouble for metals out here. Because we know of the directional correlation, not tick for tat, so to speak, but we know about the directional correlation between these two. And this is a very strong message out here. I wish in the case of gold, we really had some type of target for a bottom out here. And when I say target, a price point, if you're going to go ahead and twist my arm and ask me to give you that target, I have no other choice than to say, well, it's got to be the 0.618 retracement level. Much like the yen out here, which says 1193, and it's just not a good scene that gold broke that rising trend line. Not just in dollars, but basically in almost every currency out there, every currency that really matters out here. And so this trend is no longer the friend inside of Goldilocks. So be careful. Now, is there a possibility that there's a bottom that is forming out here? That just my view is just dead solid wrong out here. Well, I'm giving you my view from the daily chart right now. But if we go size down, instead of supersize it, we undersize it just a bit. We go down to a 5-hour chart, right? 5 hours, so that way we've broken up the day into, in essence, 5 segments out here. What we do know is that gold is pushing lower with less relative energy as we speak right now. Now, just as when gold moves higher or anything moves higher with less relative energy and it can form a top and wait for the bears and the bulls to rush in, well, we can have that same pattern right now on a 5-hour chart. Now, you have to stay in the 5-hour time frame sense of mind. We don't have a bullish reversal signal, by the way, but if we were to get one overnight and you were trading this currency, you'd be paying attention to this. I'm paying attention to it. I think you should pay attention to it, at least from a 5-hour perspective out here. Let me see what the 2-hour perspective says. So let's just take a look at that. Also, price moving having lower, less relative energy. We've seen this pattern play out in the past, but in seeing this pattern play out in the past, what then you and I would do once the bulls were to rush in, what we would do is we would go over and take a look at our profiles, our different multi-time frame profiles out there. And those being, in this case here, 60-minute and 240. So if we go ahead and we put gold on there, trading out at 12.16, and I'm just looking at I can change this to a 3-hour chart, a 5-hour chart. Why don't I just do that? For the blanks and giggles, you can fill in the terminology out here. The bounce that you would see in gold on the 5-hour time frame would take it to 1228.60 if it were to occur. 1228.60, by the way, is just like Mike and I were talking about in JP Morgan. The bottom and the center of its profile happen to be the same. That's significant resistance. Any close above that, if you're an intraday trader of gold out here, you'd really, and you were taking a long position at some point here, you'd want to see a close above 1228.60. Why? Because that would signal we ought to see 1240.10. And that's what that's how you put that all together. But that's a real significant level of resistance. You would think of lightening the load, so to speak, if you were in a long position. I'm not suggesting you get in a long position right now. We don't have any kind of signal on it, certainly a 60-minute chart that suggests that you do so. And that yen is motoring along. So you wrote the TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Earlier when I sat in for Larry this morning, I was taking a look at the Apple chart. I see some conversation inside the Tiger's Den about Apple, and I just forgot to cover it. But and it's not just this chart here, but part of it was because of being along the NDX 100, I was looking at really the top 10 stocks that make up the NDX 100. Of course, I was looking at all the stocks that make up the NDX 100, quite frankly. I was looking at this chart here, which is very important to me. It's very important to you. It's very important to anyone that is along the NDX 100 who wants to call BS before Steve on the mere fact that it's only 5 stocks that are moving the NDX 100. For goodness sakes, folks, if you just take the entire NDX 100, all 108 of them, and you equally weight them, such as they do inside the QQEW, which is the top portion of my screen out here, what you're going to notice is that you're at a new all-time high. Yeah, it's 52.91. It could care. It could give a rat's patootie about how much real weighting inside the QQQ Apple has, which is the bottom portion of my screen out there. It is not just 5 stocks or 6 or 7 or 8. 85% of the stocks inside the Index 100 are ahead of where they closed on December 31st. It's really that simple. But most important is that markets, when they form these tops or bottoms, they get into these divergences out here. And we just don't have that inside of the QQEW. And don't be going short this. The equal weighted ETF is just saying to you. Now, you might be able to actually pick the top, the very top tick out there. And if you can and you do, hey, man, I mean, hats off to you. So I'm giving you the information not based on that type of a trader out there. I'm giving you more of the general, how do we want to, the trend, the intermediate. There we go, the intermediate time trend. And the equal weighted ETF inside the Qs is not compelling at all. Not compelling at all with regard to the BS that's out there. That's only 5 stocks that are contributing, and all holy heck is going to break loose out there. Now back to the Apple story out here and trying to come up with a projection, just really using the 1.618 Fibonacci expansion between a significant high swing point, that is, and a significant low. And that says, Apple should head up to the 162 level, the 1.618 expansion. Then to try to confirm that, and I don't use this, I haven't found this to be a useful tool, with the exception of Apple. And I do mean a useful tool out here. And if we take a look at the money flow index, that is the bottom panel of my screen, using a 20-day moving average out here. When price is above the 0 line, you look at the bottom panel of my chart. This is applied just to Apple. When price is above the 0 line, which it did just back here, looks like May 4th, 5th, something right along those lines, he moved above it. And price is above Stevie's oscillator and change line, which is right now priced at 149.27. It's just very bullish. So the setup here in the NDX 100, by measuring it against the equal weight, by taking a look at the weighted structure of Apple itself, it wants higher price. So everything here is actually in alignment. It's not like it needs to go to the chiropractor and get aligned. It's already in alignment here to suggest that what we are looking at is higher prices still to come. Higher prices still to come out there, whether you want the other side of the trade or not out there, which is cool. That's what makes the market, right? So you got my take, my narration of but I just simply put it all out there as well, and we'll get the other side of the trade from someone else. Now, question came in, can we take a look at Facebook? We'll have to do it quickly. We have about 8 seconds out here. If we take a look at Facebook, in 8 seconds, the easiest thing for me to do is just simply go ahead and turn on those profiles and see what we see out here. And what we see is that Facebook ought to have some support at 149.90, Tarpon 2, and some resistance at 153.60. So it looks pretty good. Hey, folks, stay tuned. Your favorite polar bear of mine, David White, and I do mean polar bear this time around. He's up next on the Tom O'Brien Show, 3 to 5, Andy Heck from 5 to 6, have a terrific Tuesday. We'll see you on Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.